Hi folks, Lee Gettess here with the Market Sense for the week of August 26th, 2014. We're going to look at some charts that come from the Trade Navigator software. And looking at a weekly bond market chart here, last week was inside to the previous week, and this week so far hasn't done a whole lot either, although by and large, I think you have to be impressed with how well they're holding up. I mean, everybody's talking about how the Fed is going to have to raise interest rates sooner rather than later, and yet the bond market seems to hold in there pretty good. That's definitely not raising rates. They did hold resistance up here already. Resistance is in the, well, let's call it 141 even to 4108 is roughly the resistance zone here. And they have held that so far, so they could come back down. But you can see they're still comfortably above the middle moving average there, which is around 139.28. And, that leaves them in a very good position, very strong at that point. And even if they were to drop down here to the 138.16 area in the lower moving average, that still would look pretty good and be well above the previous swing low. Heck, at some point they're certainly going to trade down to the mid-Keltner channel, and that's all the way down to 136.24. And were they to do that, it would not necessarily be ugly. So, it's not a low-risk thing to assume they're going higher, but I just think you have to be impressed with how well they're holding up so far. They've been going up all year, and there's nothing in this recent price action that suggests, okay, this is it, let's run for cover. They may not be done going higher just yet. Speaking of not done going higher, let's look at the S&P here. Boy, after this hard break for a couple weeks here, they've turned back up, and this is just sort of almost ridiculous here. There is resistance up here, 2001, 2002, which they have been up into and could hold. I mean, it's possible. They could definitely hold that. The thing is, the support that they should hold if they're going to continue to trend up is down here below 1965. How's that looking? Think they're holding that okay so far? Look, this has the potential to just absolutely explode higher. Now, to be fair, what they've done so far is, if you can imagine snow melting, it never goes back up. It just sort of drips down lower, lower, lower until it's gone. Well, let's reverse that, and that's what stocks are doing. They're going up. They're like melting up. They're not really doing anything, but they're not going down at all. There are no even intraday swings to deal with. There's just no selling. Volume is absolutely pathetic. There's just nothing happening except they continue to grind higher. Now, it won't take much buying or selling to come into this market to create a pretty substantial move in this environment, but at this point, it sure looks like that move is likely to be up. I mean, with the interest rate environment globally, it's almost like there's not much of any other choice. Now, of course, Ukraine, Russia, etc., there's all kinds of situations that could harm the market, but right now, the potential is there for this thing to just explode higher, and there is no way that I can see to get involved with low risk, which is a little frustrating, but that's where we're at. I'd love to see a big dip down because I think maybe then we could find something to buy against. But at this point, it looks like they could go higher. It's scary that they could go lower, and there's virtually nothing I can do about it. So, unfortunately, that's what we've got for you today. I hope you're better off and can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.